All right. So I'd like to welcome you all to our session for economics 1A. I know that there might be a couple of you that are coming from the advanced diploma management class, but mainly this one is for first year's economics. But like I've said to the previous class that I was assisting, microeconomics and economics 1A are basically the same thing. The only difference is that those guys in advanced diploma, you are going to do a bit more calculations than normal. So just as an introduction, I just thought maybe you guys can also just join us in today and also see how we carry out the classes. So concurrently at the same time, we also have another class that is running for microeconomics that is run by my colleague Roy. He's usually the one who specializes in the advanced diploma class, but I'm sure if you missed the class last week, it might not be that beneficial to you. So I'm sure this is beneficial for you. So what we are going to do is we've already done a bit of the introduction, but since, like I highlighted, this is our first class officially for the paid students, we are just going to do a bit of a revision of what we've already covered so that everyone is on the same page in terms of what we need to do. But before we do that revision, I just wanted to spend maybe 20 or so minutes explaining a particular topic that we haven't covered yet, that we also would want to do as part of the revision that we are going to be doing today. All right, I hope that's clear to everyone. Okay, so let's see. So for those of you that haven't made any payments yet, like I said, this is the last class that will be done for free. Any other class that we'll be doing will have paid class. So I encourage you, make your payments, join the classes, and benefit from them. All right. So we'll also be doing assignments in the class, we'll do exam preparation in the class, and etc., just to make sure that everyone is on the same page. All right. So economics. All right. So over the last 2 weeks, we've gone through the basics of what economics is all about, right? We've highlighted what is the definition of economics, and we've said that economics is the study of trade-offs, i.e. the study of how you and I, the individuals, how we make the particular choices that we make, right? And why do we need to make these choices? We introduced the term of scarcity, we introduced the term of opportunity costs, and etc., where we say that we make choices because there are limited resources, or because there is scarcity, or because there is scarce resources. Which resources? We said the resources are land, labor, capital, and entrepreneurial skills. Those are the 4 major resources that you find within an economy, right? But we said these resources are in limited capacity. For example, there are only 65 million people in South Africa. There are only so many hectares of land in South Africa, right? There is so much capital that is available in South Africa. There are so many number of entrepreneurs that are available within the country. So because these resources are limited, we can only produce a limited number of goods and services. We can only produce a limited number of cars. We can only produce a limited number of computers. We can only produce a limited number of cabbages. So we have to make a choice. Should we produce cabbages? Should we produce computers? Should we produce medicine? Should we produce cell phones? Depending on the number of the resources that we have at the end of the day. So we say that economics is the study of that, the study of the human behavior, the study of the interactions that happen as people make those different choices. And as they make those choices, we said they make these choices because unlimited resources. But what the people want is what is unlimited. The resources may be limited, but what the people want is unlimited. What you desire as an individual is unlimited. I gave the example, and I said that I want a house in Durban, I want a house in PE, I want a house in Cape Town, I want to drive a Bugatti, I want to drive a BMW, I want to drive a... So the desires or the wants that I have as an individual are unlimited, whereas the actual resources to create those goods and services are limited in nature. Hence, economics is the study of choice. How do we make choices on what to produce, how to produce, and for whom to produce, which are the 3 economic questions that we have discussed. Right? So economics is the study of basically that, of how we have alternative uses of our resources as what? As a particular nation or as a particular business. So in that same introduction, we also did highlight a couple of other things that I said that it's important for an economic student to have a bit of a clue into some of these different aspects and whatnot. So one of these aspects was the difference between macroeconomics and microeconomics, right? When we said macro represents the broader type of economics, micro represents the narrower type of economics. And then we differentiate between positive economics and normative economics, right? When we said positive economics deals with facts, while this normative economics deals with value judgments, right? So I encourage you to go through our lecture number 1, our lecture number 2, because it covers some of these aspects that we dealt with, including, like I said, the definition of economic of opportunity cost. Because whenever you make a choice, there is an opportunity cost, right? There is a foregone alternative, right? So again, I recommend you go through those videos. They explain most of these concepts in detail that we've already covered. We don't need to repeat them. All right. Okay. So I've covered all of this in my slight introduction. If you did not attend those classes, please, after the lecture, ask for the videos so that you can get those videos and go through these classes in much greater detail, because they explain these concepts in much detail. So in our lecture number 2, so what I've talked about was lecture number 1. So in our lecture number 2, we then covered we covered the production possibility curve, right? We covered the production possibility curve, where we highlighted that within an economy, we can simulate the functioning of a closed economy using the production possibility curve, right? Where we say that a production possibility curve represents the maximum number of goods and services that can be produced by a country when it utilizes or maximizes all the factors of production it has, right? And then we talked about how on that production possibility curve, you can represent different aspects, right? We talked about how you can represent scarcity on the production possibility curve, how you can represent underutilization of resources on the production possibility curve, how you can represent choice on the production possibility curve, how you can represent opportunity cost how you can actually calculate opportunity cost on the production possibility curve. All of those different aspects in unit number 1, we highlighted that they can all be represented on the production possibility frontier or curve, right? And that is one of the key things about economics. Everything that you learn in theory, you can do calculations, you can do graphical presentations of it. So you actually need to be a bit adept in terms of how do you present certain information on a graph and how do you present certain information mathematically using calculations. Right? So the production possibility curve is one of the models of economics. Now for the next 20 or so minutes, I want to talk about the second model of economics, which is the circular flow of income. Then after the circular flow of income, we're going to do some questions for these units. Right? So the circular flow of income, right, is basically another model that tries to explain how an economy functions, right? Trying to explain how an economy is functioning. Is someone asking a question? Of how an economy is functioning. Now, for you to understand the circular flow of income, you need to understand a couple of the key concepts, right? So the first thing is that there are what we call key role players within an economy. Then after understanding the key role players, there are what we call the major flows of an economy. And then after that, you need to understand that there is an open economy and there is a closed economy, right? So those are the key concepts that you need to understand when you're talking about the circular flow of income. So what do I mean by the major role players within an economy, right? The major role players within an economy, I'm saying within an economy, there are agents, what we call economic agents or economic participants within an economy. So there are 4 major role players, right, within an economy, right? There is households, there is businesses, there is government, and then there is foreigners, right? So those are the four major role players within an economy. There are households. When we say a household, we are talking about you and me within an economy. We are talking about James, we're talking about Kanani, we're talking about Melissa, we're talking about you, right? We're talking about me and you. But when we are dealing in economics, we don't say individuals as in one person most of the time. We say households because a household represents a purchasing unit. So you and your family, you make decisions that are similar. You buy goods and services that are similar. You buy the same car for the whole family. You buy the same food for the whole family. You buy almost the same clothes for the whole family. So you make decisions that are similar. So we consider you to be a household, a decision-making unit within the economy. So a household, by its very nature, what is the role of a household in an economy? The role of a household is this one. Households own, right? When we say own, 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 right? Which means that it belongs to them. The factors of production. Remember, what are the factors of production? Land, labor, capital, and entrepreneurial skills. Those are the four factors of production, or those are the four economic resources. So the households are the owners of the four factors of production. It is the households that own the land. It is the households that own the labor. It is the households who have the entrepreneurial skills, and it is the household who have the capital, right? So the households are the owners of the factors of production. Understand that correctly, right? Then what are businesses? Now, businesses are now the enterprises that function within an economy, are the firms, the organizations that function within an economy. Now, what is the role of a business within an economy? A business is a producing unit, right? They are the ones that produce the goods and services. They give us the laptops, they give us the juice, they give us the food, they give us gold and etc. They are the ones that are producing. They don't own the factors of production, but they produce using the factors of production. So you will find that a business will want labor. So they will go to the households and get labor. A business will want capital. So they will go to the households and borrow capital. A business will want land. So they will go to the household and rent out land from the household. So they want entrepreneurs within businesses. So they go to the households and get entrepreneurs within the what? For the business. So a business by its very nature, it does not own the factors of production, but it consumes, it utilizes the factors of production. And businesses are driven by profit motive, right? We'll talk about this, I think, unit number 4, 5 or so. We're talking about profit maximization. All right. So the first thing now is the government, right? What is the government? Now, the government in any economy usually is the regulator of the economy. But when we're saying the regulator of the economy, we're saying that they perform the regulatory function within the economy, making sure that the economy functions properly. They create an environment in which to operate your business, i.e. the legal framework. They correct things that are bad within the economy, what you call market ills and market failures, right? And they also have got that a function of public expenditure, right? You need the grants and whatnot that they have to provide for people that cannot be able to sustain themselves, right? So that is the government within the economy. So the government will introduce taxation, it will introduce grants, transfer payment, regulation, and etc. You will see when it starts to fit into the picture. Then lastly, we've got the foreigners within the economy. So each economy also is got what is called foreigners that are coming into it. What is the role of foreigners within an economy? So foreigners provide the role of the export-import with the economy. So what is export-import, right? We are saying foreigners can provide factors of production, right? Foreigners can provide labor to the economy. Foreigners can provide capital to the economy, right? So it means that we as an economy are importing labor, we are importing capital, right? Foreigners can also provide goods and services. So there might be goods and services that we are not able to produce in South Africa, which means that we get it from what? From foreigners, right? So that's the foreign sector, right? Also, there is the export part, where we as South Africans, we take our grain, we take our vegetables, we take our fruits, and etc., and we export it outside the country. For example, South Africa is also an exporter of vehicles. So we are exporting vehicles to the we're exporting vehicles to the what to the African continent, right? How are we doing that? Through what? Through export in the foreign sector, through our dealings with the foreigners, right? So those are the major role players within an economy. Now, these major role players, remember I said that they are major role players, but then after major role players, we said there's three major flows. So the interactions between these four players creates three major flows within an economy, which is why it's called the circular flow of income. Right? They create three major flows within an economy. There's what you call the flow of goods and services. There's what you call the flow of productive resources, and there's what you call the flow of financial payments. So those are your three major flows, right? Which is sometimes they're known as the production flow, the income flow, and the spending flow. So each of these things should actually be equal to each other. I'll explain. So when we're saying production flow, we are saying that a company is going to produce goods and services. So for example, a company is going to produce a laptop, right, and put it into the economy. That's part of the production flow. But once it has produced a laptop and put it into the economy, right, for it to produce the laptop, it had to use labor, right? It had to what? It had to use labor. So what is it going to do? It's going to pay the employees some income, right? So the production flow creates the income flow. Why? Because from production, you have to pay for the labor. You have to pay for the capital that you borrowed. You have to pay for the rentals for the factory that you used. You have to pay profit to the entrepreneur that you particularly used, right? So production creates income. But what happens to income? As an employee, when you get your salary, what do you do with your salary? You go and spend it, right? You take your salary and you spend it. What do you spend your salary on? On the same laptop that was produced. So the production creates the income, and the income creates the spending, and the spending creates the production at the end of the day. So it's a circular flow of income. Everything is equal. The money that you used in production, you're going to put it into income. The money that you get in income, you're going to put it into spending. The money that you put into spending is going to go back to the factories under production. So everything is what is equal. But the issue that you have to ask yourself is, what is the role of each and every person within each of these flows, right? Okay. So we want now to start drawing the diagrams, right? What I've shown you is a very simple diagram of the three major flows, but we want to start drawing the more complicated diagrams. So for us to draw these complicated diagrams, we now have to introduce different types of economies. What we call a closed economy, what we call an open economy, what we call a closed economy with the government intervention, and etc. But before we do that, there are different types of markets that you're going to see in the economy. There's what we call the resource or factor market, and there's what we call the goods and services market. There's also what is called the financial market, and there's also what is called the foreign exchange market. We don't really deal with those ones in detail, but you should know them. So there are four types of markets. The two major markets is the resource or factor market and the goods and services market. Those are the two major ones. Then other ones that you might also need to know is the financial sector market and the foreign exchange market. I'll talk about them later. So what is the resource or factor market? The resource or factor market is just the market in which factors of production are sold. So remember what I said. I said the households are the owners of the factors of production, which means households are the owners of land, labor, capital, and entrepreneurial skills. So within the factor market, who is the supplier? It is the households, because they own the factors. So the households go into the factor market and supply land, and supply labor, and supply entrepreneurial skills, and supply capital. And who is the consumer within the factor market? It is the business. Because remember, we said that the business uses factors of production to produce. So they go into the factor market, and then they consume the land, they consume the labor, they consume the entrepreneurial skills, they consume the capital. But what happens in that factor market is, because the household is supplied labor, they will get an income in the form of what? In the form of wages or salaries. Because the household is supplied land, they will get income in the form of rentals. Because the household has supplied capital, they get what? They get income in the form of interest. Because the household has supplied entrepreneurial skills, they get income in the form of profit. So those are our four. So those are the four resources, and those are the four types of income that accrue to those resources. You should always know those things, right? And then in the goods and services market, this is now where you get your laptops, your orange juice, your phones, and whatnot. Right? In this goods and services market, this is when the company now is the producer and the household is the consumer, right? Where we find the spending happening within that market. So those are the two key markets that you're going to get. The other two we'll talk about them later. Then what about that? So how do these two markets interact, right? How do these two markets interact? Now it starts to get slightly more complicated now. It starts to get what? Slightly more complicated. So don't lose me here. If you lose me, please highlight so that I can explain further. So remember, we said that there are two types of markets. There is the what? The markets for goods and services, and the market for factors of production, or what you call the factor market. So those are our two markets, right? Market number 1 here and market number 2 here, right? And we say that there are 4 role players within an economy. Now, to make this very, very simple, let's start with only 2 role players. So this is called a simple closed economy model with no government intervention. Closed economy, we're simply saying that there are no foreigners. No government, we're saying that there's no government in this economy. There are only 2 players. There is the households and the companies or the firms or the organizations, right? So those are our 2 players. So how do they interact with this market? If you were listening to what I was saying, I'm sure you already know how to answer this. So you can see that the firms, they do what? They produce goods and services and supply them to the what? To the factor market, sorry, to the goods and services market. And when they do this, these households take these goods and services and consume them and eat them, right? And make use of them. So this is what we call the production flow. Where we said there is production that takes place, right? There is production that takes place. But how does this production take place? How does this production take place? For this production to take place, you have to use land, you have to use labor, you have to use entrepreneurial skills, you have to use capital. And where does that come from? It comes from the households, right? It comes from the households. So what happens? The households take their factors of production, supply them to the factor market, and the firms consume the factors of production in the factor market and enjoy them, right? So that's still part of the what? Of the production flow. So for you to produce goods and services, you are going to need factors of production. But once you have produced, 2 things are going to happen. The first thing is on one end, okay, give me a second here, I want to change the color. On one end, we are going to see that the firms are going to pay for the factors of production. They're going to pay for the factors of production. Income, right? We said, what are the incomes? We said rentals, interest, profit, and wages, right? Those are the 4 incomes. So they have to pay income for the factors of production. And when the households get that income, what do? They spend, right? So then this gives us now what we call the what? The income flow and the what? And the spending flow, which are our 3 key flows. We've got the production flow, which uses the factors of production and produces goods and services. And then we've got the income flow from the firms to the households, where you are paying for the production that has happened. And we've got the spending flow from the households to the firms, where you are now consuming the goods and services that we produced. So those, and that is the simple model, right? The simple closed economy model. But we said it's simple and closed economy. Let's make it more complicated. What if we introduce the government? What if we introduce the government? What then happens to our economy if we were to introduce the what? The government, which means that there are now three role players within this economy. So the markets still remain the same. We will still have a factor market, we will still have what do you call it, the goods and services market. But when you introduce the government, then there is now some leakages and now some injections that are going to happen within our economy. There's now some leakages and some injections that will happen within our economy. So the government, by its very nature, it taxes people, right? Remember, you guys are paying income tax. I'm hoping you're paying your income tax, right? So when the government makes you pay income tax, that's money that's going out of the circular flow, right? Because the government is making you pay income tax, right? But the government also pays grants to the what? To the households. Those that don't have money, they get some money from the government, unemployment benefits, elder grants and whatever it is, they are paying some grants, right? So that's again money that's coming back into the what? Into the economy. So an injection is money coming into the circular flow, whereas a leakage is money going out of the circular flow. The same government also goes to the what? To the firms and purchases goods and services. Because remember, government officials need laptops. Government officials need to travel. Government officials need food. So the same government will also go to the firms and buy their purchases. But the same government will also tax, remember, VAT, capital gains tax, and all of those different types of taxes. They also what? They also tax these things. Right? The government also employs people, which means that they utilize labor, they utilize land, they utilize the economy. So you can see that there is interaction that is happening between the government and the households, the government and the firms, the government and the different sector markets that are what? That are happening. Now, let's further complicate this model, right? Let's further complicate this model. What if we what? Just give me a second, I'm just waiting for my diagram to show up. It's taking a sweet time. Okay, so we want to further complicate this. Now I want to introduce the government, I want to introduce the foreign sector, right? So now everything is there. Everything, all the four key role players and the different markets. I think the only market that is not there is what is this one called? The financial market. I think that's the one that's not there. Let me see if I've got a diagram of the financial one. Okay, yeah, this one has got the financial markets. All right. But basically same concept, right? So, all right. Okay, let's see. All right. So let's check the role players. How many role players do we have? We've got one, government here, right? We've got two, households here. We've got three, firms here. We've got four, foreign sector here. You see, we've got four key players. Then how many markets do we have? We've got one market for goods and services here. We've got two, our factor market. We've got three, financial markets. Then we should have a fourth market for usually located here, but it's not there. For the what? For the foreign sector, right? I'll show you the other diagram once we've completed the fourth market for the foreign sector. So those are some of the key aspects. So again, same concept. How do these things interact? So who interacts with the goods and services market? The households, they put money into the goods and services market because they are spending. right? They put money into the goods and services market because they are what? Because they are spending, right? So when they spend, they take goods and services and put money into that part, into that market, right? But what about the government? Same thing. The government also goes to the goods and services market and puts money in there because they are also spending, right, for the various goods and services that they want, that they particularly need, right? What about the foreign sector? The foreign sector supplies the goods and services market and also takes from the goods and services market. These are your exports and your imports that happen in the what? In the foreign sector. What about the companies? The companies supply the goods and services market with the what? With the various goods and services that they're producing. So that's the interaction with the goods and services market. What about the interaction with the factor market, right? Interaction with the factor market, the companies go to the factor market and what? And consume. They consume the what? The land, they consume the labor, they consume the entrepreneurial skills and whatnot. And the households, they get paid for the what they're supplying to the factor market. They get wages, they get profit, they get rentals from the what? From the factor market. Even this one also interacts with the factor market. Even the government also interacts with the factor market. Just that it gets confusing if you start putting a lot of arrows there. But both the government and the rest of the world will also interact with the factor market. Because within the factor market, you will find foreigners being employed by South African companies. Within the factor market, you find government officials going there to hire accountants, to hire statisticians and whatnot, right? So both the government and the rest of the world also interact with the what? With the factor market. And then the financial market, individuals go and put their savings into the financial market, which is what? Which is going to be a what? A withdrawal, a leakage from the system, right? And then governments borrow from the financial market, which is an injection into the system. Companies also borrow from the financial market, which is an injection into the system. So that's all the different ways in which you will see these different role players interacting, right? Interacting with each other within the what? Within the factor market. So this again is another example of what the diagram is going to what? To look like after you've included everything again. So this one, you can see it has got the foreign sector there, where you know how the foreign sector, foreign exchange market interacts between the resource market and the product market. Because remember, countries have different currencies. So for you to interact with a foreigner, you need to be able to exchange your different currencies, right? So that is where the foreign exchange market comes into what? Comes into play, right? So ladies and gentlemen, this brings us to the end of what I wanted us to talk about for today. Of course, the issue of leakages and injections. Well, let me talk about that a little bit before we start on the questions, right? So, but I've already explained some of this. Where I said leakages represent something that is going out of the what? Of the flow, of the circular flow of income. For example, taxes, right? You get your income, it's taxed by the government, which means it reduces the flow of income, right? For example, imports. Imports were saying that you are going to buy a foreign product. So money is going outside the country to pay the person from the US or from a person from Botswana who sold with that particular product. So that's another leakage. Savings, they're saying you're not using that money for spending, you're putting it in a bank somewhere. So that's another leakage. Then injections, this is money that is coming in. For example, a government grant to an individual, that's an injection. An export, that's an injection. Because although the goods are going out, money is coming back in because the foreigners are going to pay for your goods and services. That's an injection. Or a foreign direct investment. If the foreigners come and invest capital into South Africa, that's another injection. That is what is happening within the what? Within the economy. So there's leakages and injections that we find within the circular flow of income. All right. So before we do some practice questions, is there anyone with a particular question that they have before we start doing some practice questions together? Is there anyone with a particular question? Someone says all clear. All right, so we are good. So let's do a couple of practice questions so that you can also see how you get asked. Because remember, your exams, your assignments, and whatnot. Some of them are multiple choice questions. So it's good to do some of these questions so that you can see how you get examined. And you can also measure yourself to see. Don't just wait for me to say what the answer is, but also try to attempt on your end and see if you got it correct, or maybe you still need to revise on some of the aspects that we've studied. Then for those of you that joined us today for the first time, like I said, you might not understand some of the answers, but if you go through the first two videos that we did over the last 2 weeks, you get much more depth in terms of an introduction of economics, about choices and whatnot, everything that we want, everything that we discussed in detail. All right. So the question here says, Fatima is a 400 Rand voucher. So you see, there are figures. That's why I was saying that you need to understand how to operate mathematics. You need to understand how to present things in graphs and whatnot. Because economics, you will notice there will be a lot of graphs. There will be a number of calculations, especially for the guys in advanced diploma. I would advise you check the question paper from last semester. I think 80% of it were just calculations. Just calculations that you needed to perform. Right? But for the economics 1A guys, yours was, it doesn't really have many calculations. I think it was like 30% calculations. Then the rest of it was just theory. Right? So Fatima has got so Fatima is, someone is asking for the recordings. They will be available. They're available in the groups. You can just ask in the groups, or you can send me a message after the class, and I'll add you to the different groups so that you can get the recording. All right. So Fatima is a 400 Rand voucher for for her local clothing shop. Right. With 400 Rand, she can either buy 2 t-shirts, a pair of shoes, a pair of jeans, or sunglasses. Right. She already has sunglasses and she does not want new shoes. She would like the 2 t-shirts, but decides to buy the pair of jeans. What is her opportunity cost? So this question is trying to assess your understanding of 2 particular concepts. Your understanding of the issue of choice, right? And your understanding of the term opportunity cost. Remember what we said about opportunity cost? Opportunity cost is the value of the next best alternative forgone. Right? That's opportunity cost, right? The next best alternative that has been what? That has been forgone, right? So what is the next best alternative forgone by what? By Fatima, right? So there are key things that are highlighted in the case study. It says here, she already has sunglasses, which means that sunglasses are not the next best alternative for God because she already has them. It says she does not want new shoes, which means new shoes are not the next best alternative for God because she does not want them. But it says here, she would like 2 t-shirts. She can buy 2 t-shirts with the 400 Rand and she likes them. But then she decides, I would rather buy a pair of jeans. So the next best alternative for God becomes the pair of jeans, which she what? Which she has forgone. Right? Because she could have bought the what? She could have bought the 2 t-shirts, but she bought the pair of jeans, which means the 2 t-shirts are the next best alternative for God, because she has taken the jeans instead of the 2 t-shirts, which means your answer is going to be, her opportunity cost is going to be the 2 t-shirts, right? That is her opportunity cost. That is what she has forgone in making that particular decision, right? That this question. Go to the next one. Okay. Okay, let's see. I would like you guys to just have a look at this question. I just want to get some water. My throat is a bit dry right now. But look at this question and when I come back in a minute's time, we can continue. Okay, I'm back. All right. So we've here question number 4. Complete the following statement, right? Households sell their what in the dash market, right? Households sell their what in the dash market. Now, this is what I was talking about, your understanding of the circular flow of income. What is the role of the households in the different markets? Where do they sell? So the households, remember, are the owners of the factors of production, right? So they sell their factors of production in the factor market, because they are the suppliers in the factor market. They are the ones selling within the factor market. They sell their land, they sell their labor, they sell their entrepreneurial skills and whatnot in the what? In the factor market. So households sell their factors of production in the factor market. Then they use their income to buy what in the dash market, right? So what do households buy? They buy goods and services. And where do they buy the goods and services? They buy them from the goods market. And they buy them from the goods market, right? So, which means your answer was going to be what? Your answer was going to be B, right? Your answer was going to be B for this one. Okay. Let's look at another question. So these are examples of the questions that you will see in your quiz, i.e. The KCQ, the formative assessment number 1. These are examples of some of the questions that you'll see. And then also these are examples, some of the questions that you might see in your exam setup. So exam setup, usually there are 2 types of exams. Either the whole exam is multiple choice, or part of the exam is multiple choice and part of it might be questions. So you might just have to clarify with your lecturer what the exam structure is looking like for this semester. But sometimes it's all of the exam can be multiple choice, or part of it is multiple choice and then part of it is just depends. Right. So again, this question is we did this one. All right, let's look at this one. When there are not enough resources to produce desired goods and services, we say that there is what? Remember, definition. These are definitions. We say scarcity. We say scarcity represents when you have got limited resources to produce goods and services. So that's what that's scarcity. It's not unemployment, it's not a shortage, but it's scarcity. Right? That's the correct term to describe the lack of resources to produce goods and services. Right? 1.2 says here, Thomas has the following options in order of preference. Right? Thomas can either go to the campus, can go to the beach, can stay at home and play video games. If he chooses to go to the campus, then the opportunity cost is presented by what? So remember, next best alternative foregone. So if this is ordered in preference, which means the next thing that was in line is the next best alternative what? The next best alternative foregone, right? If it's ordered in line, which means that's the next best alternative foregone. So we can see here that if he chooses to go to the campus, then it means that the next best alternative foregone is to go to the beach, which is option number 2, which is option number 2. Yeah. Yeah, let's go to the next question. Okay, it says in an economy, the government does what? What does the government do in an economy? A, it says produces public goods and services. B, purchases factors of production in the factor market. C, purchases goods in the goods market. D, all of the above. The actual answer is actually all of the above. That's what the government does. Remember, we said they interact with the goods and services market because they buy goods and services. We also said they interact with the factor market. Why? Because they need labor, they need capital, and etc. They also produce public goods and services. If you check, I think lecture number 1, we talked about different types of public goods and services, right? We talked about that in our lecture number 1. Okay. All right, these ones have got answers. I think you guys can go through them in your spare time. Okay. Another attempt, the one without answers. Okay. It says here, in economics, the how and production question refers to. Remember, there are 3 economic questions: what to produce, how to produce, and for whom to produce. So he's saying, what does the how question refer to? And we said, when you're talking about how to produce, you're talking about how do you mix and match the resources that you have? How do you allocate the resources, the scarce resources, between the competing users or between the competing needs of the specific of the specific economy? So let's look at the answers. The problem of allocating scarce resources among competing users, it looks nice, but there's something that I don't like about it. But let's leave it. Let's put a question mark there. B, the ways in which factors of production can be combined to produce output. Now, this is very, very correct, right? The way in which a firm decides on its profit maximizing rate of output. It looks nice, but question mark. The problem of how output is distributed among, no, this is the for whom question. The way in which the state sets output targets in a command economy. No, this is more like the what question, right? So our answer is going to be A is actually almost correct, but in a way you'll find that A is incorrect because of the last sentence where it says competing users. If it was competing uses, right, then it was correct. But competing users, that's now more of a for whom rather than a for what, how, right? When you're talking about how, we're talking about the output, right? How do we produce the output given the specific factors of production that we have as an economy? Then number 2 says, the basic question of what to produce and for whom to produce are potentially interdependent because, right? Why are these 2 questions interdependent? What to produce and for whom to produce? So remember, if you are saying this is what I want to produce, someone is to be available to purchase or consume that. So you cannot decide what to produce independently from where to supply, because you need people to buy your product at any point in time. So let's look at the answers. A particular level output may be produced by many like that. Different patterns of factors produce different factors of income of distribution. All right, that's better. Income and wealth are concentrated in the hands of economic powerful. No. Markets cannot be relied upon to allocate resources efficiently. All right. The best answer here would actually be different patterns of factors generate different patterns of income distribution, right? They generate different patterns of income. I think that's the best answer for this one. Let me just have a relook at it. A particular level of output may be produced by many different combinations of inputs. Let's see. There's a better answer here. Income and wealth are concentrated in the households. Powerful. Markets cannot be relied to allocate resources efficiently. Okay. B looks like the better answer, but A also could be correct. Let me just double check. A particular level of output may be produced by different combinations of inputs. The basic question of what to produce and for whom to produce are essentially interdependent because importance. Yeah, I think we can go with A. Let's go with A. I think the first one is it's a much better solution. So you can notice here that when you look at some of these answers, they will be very similar. So you know those people that say multiple choice is very easy. Multiple choice is very easy. You are going to find that in economics, multiple choice answers in economics are going to be very challenging for you. You will notice it when you do your quiz, because the quiz is 1 out of 10. So you do it your first time and you haven't read, you will be surprised you get 3 out of 10. And you wonder, how did you get 3 out of 10? It's because of some of these questions, which are very tricky, with answers that are almost correct at the end of the day. But for this one, let's go with A. Let's go with A. Although I'm also inclined to see why B can also be correct. But let's go with A. I think A would be a better option for us on this one. All right, so I think I'll do this last question and then I'll open up the lecture for anyone who's got any questions for me. All right, question 3. In economics, the 4 main factors of production are, this one is straightforward, right? Money is not a factor of production. We've discussed this in our lecture number 1. Money is not a factor of production. So you're looking at land, labor, capital, and entrepreneurial skills, which is E. Anything that says financial capital or money, that's not a factor of production. That's just lying to you, right? Then 4, a commercial forest planted to provide raw material inputs in a wood crop would be viewed by economists as it's actually land, part of the factor of production, land. It's a commercial forest, yes, but it's a natural resource, right? It's land, it's part of land. Any forest, any wind, sun, and whatnot are part of the factor of production, land, right? When it becomes man-made, now means that you have put in the effort of actually creating something or manufacturing it physically, right? Then it becomes something else different, but it's part of the natural factors of production, which is land, commercial forest. All right, so those are examples of some of the questions that you might face. So if you continue, there are other questions. There are like a lot of questions here. I think there are like 10 more or 15 more questions that you can go through. So I would advise you, in your spare time, please go through those questions. If you are not confident with your answers, within our next lecture, we are free to discuss the solutions to some of those questions. Or alternatively, I can also even provide you guys with the answers once you've attempted. I can come back maybe in the next lecture, and maybe for 5 minutes, I can tell you this was A, this was B, this was C, this was whatnot, so that you can also gauge and see if you're doing correctly. If not, and then you can ask your question so that we can correct you and provide you maybe a thorough explanation of what is important or not. So yes, I will send you the slides to what we've covered today. If you are interested in the slides, I'll send them in the group. So are there any questions for me? Let me check in the chat and see if there are questions here for me. Okay, someone say, can you please assist with assignments? Yes, we can assist with your assignments. There are 2 ways that we assist with assignment. One of the ways I'm going to explain it in detail, then the other one I'm not going to explain it in detail. The first way we assist with assignments is within the class setup that we have, like this one. Number 1, we teach you guys. Like that's like when you see we're doing past exam papers, right? Those are the questions that you were seeing. Those are past exam papers and past assignments. So your lecturer usually repeats, right? Usually repeats the assignments that you guys do. Right? So we can definitely go through the past exam papers and whatnot in preparation for your assignment. Right? That's the one way of assisting with assignment. The second way of assisting with assignments, for the guys that are doing microeconomics, I know you've got a case study assignment. We're actually going to go through it in detail. We're going to dedicate about 2 hours or so where we go through it in detail, show you what you need to do, how you reference the work, how you draw your graphs and whatnot, so that you have got a thorough understanding of how to present the assignment. I almost can guarantee you that you get at least 25 out of 30 or 30 out of 30. Right. Then the third way of assisting with assignments, I don't want to discuss it because the session is recorded here, but in essence, you can give me a call and then I can get you a tutor that can individually help you with what? With that specific assignment. But that's now separately from the classes that will be what? That will be doing. We do have tutors on our payroll that help with what? With assignments, but we don't want to discuss that too much into detail because this is a recorded lecture which will be spread out to other students. However, please, if you're interested in our classes, like I said, the cost is 750 Rand for the semester, right? The cost is 750 Rand for the semester, which include the guidance in terms of your assignments. It does not include writing the assignment for you, but it includes the guidance so that you make sure that you get your assignment. That guidance, I can guarantee you, if you follow through what we are asking you to do, you will almost get 30 out of 30, 10 out of 10 in your assignments and whatnot. So are there any particular questions for me? Let's see if I missed any other questions. Someone says, please share past exam papers. It's fine, I'll share them in the group. Someone is looking for the actual assignment for the class. I'm sure if you can ask it, the WhatsApp, the other students can send it to you, the assignment for the semester. And then someone says, how many modules for 750? It's one module. 750 only covers you for one module. You don't have to pay the 750 at once. It's in installments. If you want to pay 250 a month, it's up to you. But 750 covers you for only one module. So if you want two modules, let's say you want finance and economics, that's now 1.5. Or you say you want economics 10A and you also want, what is it called? Business mathematics, that's now 1.5. If you want another one, you just add another 750. So it's 750 per each module. All right. I think I've already explained this one. Someone says, how are you going to help us with the case study questions? Like I've already highlighted there, we're going to give you a particular guidance, right? But if you don't understand some of the aspects, please feel free to send me a message. I can respond to you directly in the message. But some of the aspects I don't usually want to go into detail about them because, like I said, this is a recorded class. So I don't usually want to go into detail about some of the aspects because of, they are not exactly above board. But essentially, within the 750, you will get the guidance that you require, right? You will get guidance for your assignments. But if you want someone to actually physically write the assignment for you, that's another story. We can talk outside this outside this platform. So yes, it's 750 per module per semester. 750 per module per semester. You are free to pay in installments. Any other questions? Someone says, how many webinars do you have tonight? Oh, we've got different types. We've got different classes. It's a tutoring company. It's not only me. We've got a lot of different classes that we have. So usually what we do is on Tuesdays, we do economics. So we've got two classes for economics. We've got microeconomics and we've got economics 1A. Both of them are done on Tuesday, right? The other one, which is this one that I'm doing, and there's another one which my partner does. His name is Roy. So you can attend either one of the classes depending on what you prefer. But we've got two classes for macroeconomics every Tuesday. Then in addition to that, we've got other classes. For example, on Monday, we do business finance, we do introduction to business management, right? So depending on which subject you're doing, you can choose there. For example, on Thursday, we've got, I think, management principles and whatnot. So there are different subjects per day. On Saturday, we've got business mathematics and etc. Right? So there are different subjects and etc. that we do on different days. You can ask again, come to my WhatsApp, and it gives you more details in terms of some of this stuff. Okay. Yes, we have business finance. We did that yesterday. Any other questions? Any other questions for me before we close the class?
How many classes are there in a, how often do you hold classes per semester?
I don't have a direct number of the classes because what we do is we endeavor to finish. That's what we do. We need to finish the study module. But each week you have at least one class for each subject. So for example, if I'm saying microeconomics, like today we did economics, right? So this means that every Tuesday we'll be doing economics, except maybe I'm not feeling well that specific Tuesday, or maybe you guys have got an assignment that we need to submit on that specific Tuesday. But in essence, every week we have got at least 1 to 2 hours for each specific module. And usually it can go for around 3 months, which is around 12 weeks. That's usually the case. It goes around for 3 months, plus or minus 3 months, somewhere there, plus or minus 12 weeks, somewhere there. Those are the number of classes that you might expect. But we don't just do classes for the sake of doing them. The goal is we want to finish all the units and then do exam preparation after we finish the units. I hope that answers you. Any other questions?
So are you going to stop with these classes?
Sorry?
Are you gonna stop doing the free classes?
Yeah, this is the last one. This is actually the last one. Because
Okay.
I've already done free classes. If you didn't get the videos, you can ask for them in the groups there. Because we did about 3 free classes for economics. I think all the different subjects we've done most of the free classes.
Is there a tutor for understanding marketing approaches?
Yes, there is. The class is done on Sunday.
On Sundays?
Yeah.
Do you have one for public management?
Public management 1B, 1A.
1A, yes.
Yes, we have a tutor, but we haven't started that one yet. I think we're starting it's either on Thursday or the following week on Thursday. But we haven't started the class for that one yet. But yes, the tutor is available. I actually talked to him yesterday. Any other questions? Any other questions from me? Someone says, process of joining the class. Send me a WhatsApp message. I'll send you the banking details. You make your deposit, and then we'll add you to the WhatsApp group for that specific class. So it's simple as that. Just send me a WhatsApp message. In case you did not have my number, let me just reshare. Just give me a second to share again my number there in case you did not have it.
Hi there, James.
Hello.
Quick one. I just wanted
Yeah.
to understand. So if I pay for the classes, let's say I cannot attend the classes, you record those classes and you send it to us if you want to watch.
Yes.
All right. No, that's it. Thanks.
All of the classes are recorded. You get the class. If there are any notes for that specific class, you also get the notes for that specific class. Okay, so those are our numbers. Mine is the last one, the one that says James. That's my number there. But any one of those numbers, someone will respond to you. But mine is the last one that says James at 071 3000 634. Any other questions before we close? All right, let's see, no other questions. So thank you guys for coming in. I hope you have a pleasant evening. Then I expect to see you in my WhatsApp inbox and we can discuss further how to help each other out. Thank you.
Thank you, sir.
All right.